Story, and this is a CNBC-TV18 exclusive. Sources say Torrent Pharma is likely in the race to buy the promoter's stake in Cipla. Ekta is here with the details. Ekta.
The latest news as per sources to CNBC-TV18 is that Torrent Pharma has joined the race for Cipla's promoter stake. However, due to the size of the likely deal, Torrent might need investor support for the stake buy and could look at options such as forming a consortium with PEs. Separately, PEs continue to be in the fray for Cipla's stake, such as Blackstone and Baring PE. Remember, CNBC-TV18 was the first to report on Cipla looking at a stake sale to PEs. CNBC-TV18 is currently awaiting a comment from Torrent Pharma. So the question is, why might Torrent be interested in Cipla? The main lure analysts say is the access to Cipla's India business, which is around 2 times the size of Torrent's India sales. Cipla, which gets around 43% of sales from India, is ranked 3rd, while Torrent, which gets majority of sales from India, is ranked 6th. The overlap also between the two companies is expected to be limited to around 1% of their top 50 brands, as per analysts. Torrent might also be interested in Cipla's US arm, which is 5 times the size of Torrent. To put it into perspective, Torrent's FY23 sales from the US was $145 million, which is less than Cipla's quarterly run rate of around $200 million. While it will add around $700 million in case the deal does go through, for Torrent, it will come with regulatory issues such as Cipla's Goa and Indore plant, adding on to Torrent's 2 critical plants which are under the US FDA scanner. The worries of a likely deal such as this would be on the margins. Torrent's margins in Q1 were at around 30.5% and Cipla's at 23.6%, with Cipla's South African region margins expected to be lower. Additionally, Torrent is well versed on India-focused acquisitions. They have in the past decade made significant acquisitions such as Elder's domestic business in 2013, Unichem's India business in 2017 and Curatio Healthcare's business last year. But the deal size has been much smaller, ranging from around 2,000 to 3,600 odd crores. The other worry about a likely deal is how will Torrent fund this likely deal. Cipla's market cap is 1.5 times Torrent's. Cipla's promoter stake is worth over 30,000 crores, and with an open offer, the deal would go upwards of over 55,000 crores. Torrent already has a debt to equity of 1 times. How much would they need to take on to fund a deal of this size? And if it is a consortium, what would the structure be like? Lastly, initial thoughts from analysts such as Antique is that Torrent, if it is looking at Cipla, might be biting off more than they can chew, and the structure and other factors such as continuity in management such as Umang Vohra, who is considered critical to operations and been with the business since 2015, will be watched.
Ekta, thank you very much for putting that into perspective. Hemang, your thoughts?